All right, guys, I wanted to do a training tonight on how to properly mark up and analyze charts so that you can have the highest probability of success and have clean markups so you can see exactly the types of trades you're looking for and know where to set your alerts and how to build a chart for analysis so that you can um, have trade setups that will give you a high or potentially high probability of success and profit. So let's get started. So right here, I've gone to, it's very important to have clean charts, no moving averages, no indicators, no nothing listed on your chart. So you don't have any preconceived notions on how to analyze your chart. So for this example, I'm going to go down here and hide the MACD to start so we can analyze our charts. And what I'm going to do is right now I have EURJPY. If you come up here to the top, you'll see I'm on the daily time frame. Just for the purposes of this training, I'm going to start on the daily. I've taken a look at this chart. Also, we'll eventually drop down to the 4-hour and the 1-hour, but we're going to start our analysis on the daily and then work our way down from there so that we can get a good picture of what we're looking for this week on EURJPY. So what I like to do is see where price currently is over here. So we're looking at this and see where is price currently, or where is price previously rejected from. As we expand out here, you'll see that we've rejected here, 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 and we've made nice swift moves that equate to this move was 250 pips before reversing. This move was 490 pips before reversing, and this one was 468 pips before reversing. So we found an area where price likes to come up to and reject, come up to and reject. And so let's get started on our analysis. So what I do is I come over here and I grab my horizontal ray tool right here. And we're going to start in this little area right here. And we're going to pop our line right there. I'm going to change it to red. Why is it going to be red? We're going to make it red because this area has rejected and sold down. So anytime price moves up into this area, we're going to be looking for sells. So I take this ray and I drag it back looking for similar areas of rejection. And as you can see with EURJPY, this area has provided support in the past. It has also provided resistance, and resistance, rejection, support, 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 resistance, 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 resistance. So this is a pretty strong area. And so what I like to do is I come here, I put my red horizontal ray, so I know that it's sells. We're looking for sells when price moves into this area, and I lock it down. So now we've got that locked. Next, what I like to do is where have we seen price reject and reverse for the buy side? So as you can see here, we've had some rejection here, reject up, came down in the past, rejected up. So this looks like it's a relatively healthy area in which we would like to see some support. And so when we're looking for support, we're looking for buy ideas. So for buys, I'm going to change the line to green. Also, I'm going to lock that chart in there. But we're going to take this analysis just slightly further. So what I'm seeing here on the daily time frame is while this has been a solid support, we also have these long wicks, obviously hunting stops because people were thinking this was previous support, and we have a pretty strong level of support right here, it seems. So I'm going to go ahead and throw a line down here. I might even move it up just I don't know, maybe so it touches, so we have more touch points, right? So the more touch points, the better. So I'm going to drag it up here just to keep everything nice and clean and equal. Doesn't have to be spot on, but we're also going to keep that one green so that we know these are two high probability areas in which price has reversed in the past on EURJPY. And so that's a pretty good analysis right there, I would say, that we found supports, resistances, and we have an idea of where to trade from. Next, I'm going to come over here to my tools, and I'm going to look for my arrow, my markdown arrow. So here, I'm going to drop a red arrow to show that we've rejected there. so I know what I'm looking at. We've just rejected flat out in this area. I'm going to lock it down. And then we've also come and rejected here and swiftly moved down. I'm just going to lock it down. Then I'm going to come over here. I'm going to grab another arrow, this time the up arrow, showing where prices reversed in the past. We're going to make that green for buys so we understand what we're looking for. It's very important that you know you don't want to confuse yourself, so you want to make sure that your colors coordinate so that you can, you know, when you're tired or you forgot why you marked this up, you know exactly why you're marking your charts up for these positions. So here these are all areas in which price is rejected from, right? So we see rejection, 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 swift move, rejection, swift move, retrace, rejection, rejection, rejection. Let's put some more just for fun, just to see what's going on here. So we've rejected here as well. We have rejected here as well. So got all those locked down. So I feel like this is a pretty solid, we have a pretty solid idea of where these zones are. And let's see. Next, we are going to drop down to the 4-hour time frame. So we've gone from the daily down to the 4-hour, and we want to come in here and start to mark up our zones for the 4-hour, not mark up our zones, because we've had some really, really solid zones. As you can see, price is just easily marked run into these areas and swiftly rejected, or come back and broke and retest, reject, broke, retest, reject. I mean, each one of these break and retest was from here, 240 pips. From this retest, 460. Oh, sorry about that, guys. So then we have this one right here, retest, 430 pips. So we have plenty of areas where you could have taken a trade and caught tons of pips, either with 30, 40 pip stops, or you could have tried to ride for a longer period of time and gotten stop profited. But either way, there's no way you would have lost these trades. And so next, what we're going to do is we have our zones here. So I like to just kind of zoom out, and I come over here and I grab my rectangle tool to draw zones. And so what I like to do personally is I like to take the lines and set up these zones, so that way we can, and I make them green because we're looking for buys from this area. And I'll drag it down here to the line. I like to keep everything nice and clean, because the noisier your charts are, the more difficult it is to remember how and or why you analyze your charts in such a way. I come over here and make this 5,000. So why did I do that? I don't know why I did that, but whatever. So we're gonna go ahead and lock that zone in there, and then I'm gonna come down here again, and I'm gonna draw this zone. Why? Because these are potential buy areas. So I like to draw this zone. And then lock it in. Oh, we'll make this one 5,000 as well. And we'll lock that zone in. And so next, what I do is kind of zoom in. So we want to see where price currently is. Also, I'll unlock these areas so I can just kind of more cleanly move the arrows to show where price rejected, so I know exactly what I'm looking for when I come back in my next analysis. So look, as you drop down time frames, you'll see more rejections, so you have an idea where price just keeps rejecting from, so that you can get cleaner entries. And like I said, we started on the daily, and now we're on the 4-hour time frame, as you can see right here. So we have these nice zones drawn. We have some good rejection points. We've got our arrows. I want to come up here and on this 4-hour time frame, I want to draw my 4-hour zone. Let's see, this is not just that precise. Okay, so it's a pretty solid zone right there where price came into. We're going to make it red. and we're going to make it 5,000. And we're making it 5,000 so that in the future, when we come back to this chart, we can see that this was a super important zone as we continue to trade throughout the future. So we're here in the 4-hour time frame. So next, what I like to do on the 4-hour time frame is I'm going to draw a trend line. So I'm going to take this trend line tool up here, as you can see, and I'm going to just draw very loosely a downtrend, because we've currently, prices moved away from resistance, so we're heading downwards. Obviously, EURJPY has been in a current downtrend over the last week or so. And so I like to just lock my trend line in there so it doesn't really move. If I really want to get fine-tuned with it, which I kind of like to do so I can get the best analysis, is I like to get as close to the wicks. Some people trade bodies. There's always an argument between bodies and wicks. I found lately that I can get you can minimize the pip damage and drawdown if I started using the wicks. So I make this trend line black so it's very easy to see. Another thing I like to do is let's see what's happened in the past when we've rejected from support and when we've rejected from resistance. So what I do is I come down and I look over here. All right, we've rejected here, we've rejected here. And I like to take the curvature tool, if I can find it. So this curve tool, and what are we seeing? This helps to really see, right? And so we see a curve there, and we see a curve right here. And what traditional pattern is that? That is a double bottom. So what we did was we came, touched support, rejected out, came back, rejected again, pulled out. So I mean, these are two opportunities where if you wanted to take the first rejection off support based off previous rejection down here, then you could see you could take this. Maybe you would have got stop profited, maybe not. Maybe you would have caught, I mean, just on the rejection out of the support alone, you would have caught 282 pips. And let's hope we're not all being super greedy and trying to catch more. 282 pips is plenty. And we would have probably had like a 30 or 40 pip stop loss. It's a 5-to-1 trade right there. Also, what I like to do is, this was the arrow from the daily. So I like to come over here, move it closer, and then add another green arrow, which further symbolizes the double bottom that we had here formed. And then I like to come over here and clean this arrow up a little bit. As you can see, we've rejected from here. Then let's come clean this arrow up. And I want to point out again, what do you see over here? That is something that would have caught our eye potentially on the rejection from this zone. Is, yes, a double top. So we're going to go grab the curve tool, and we're going to put that there. And then, that's ugly. Like I said, try to keep it clean and nice and neat, because the nice and neater your charts are, the easier they are to remember why you made the analysis and or why you took a trade. So we've got a double top, came out, we broke out, came back, retested, and broke out again. And then we've just been in that constant downtrend. And so I like to come back and study price and see where does this pair like to make double tops, double bottoms? As we can see, here's another double top. We reject out of the zone. We always like to come back and retest, reject, come back and retest, and we keep pushing down. So again, you can take your curving tool. You could say, here's one right here, another double top. We got another double top right there. Not the prettiest double top I've ever seen in my life, but that'll work. Look, we had another small one right here. So we can put that one right there. And then we can put this one right here. So we have two double tops. So it appears to me that EURJPY has this tendency to reject out of the zone and come back and retest it. As we can see, it loves to reject out of these zones and come back and retest it. So we've got a few double tops, especially in this area. We've cleaned up our arrows. So now the chart's looking nice and neat. We have a trend line that we've drawn here. So let's go ahead and, is that trend line? Oh, we'll just lock all these in. So we'll lock all these double tops in. That'll take a second. It should all be locked in. No, it's not locked. And the reason I'm locking all this stuff in is because when you start to move your chart around, it starts to disappear. And so it's always best to lock in your stuff so it doesn't move on you when you go to analyze another time frame. So let's go ahead and drop down to the 1 hour. All right, so here we are on the 1 hour. Let's make it a little more legible. And so look, our trend line that we drew on the 4 hour time frame is pretty spot on. Look at all these rejections. Rejection. Came up, got close, rejected. Came up, got touched, tapped up a little bit, rejected, rejected. So we're coming here. We've run into resistance, and we're just kind of sitting there. We see all this consolidation in here. We see that our arrows are looking pretty clean. We gotta, even unlock this one, add another one if you really wanted to. You gotta be careful. You don't want to add too much stuff, just to show all these rejection points and what's happening on your charts. So this is where I like to start to drill down into the fact that we've got our trend line, right? And so I like to do, after we've started on the daily, went to the 4 hour, got some nice clean markups, some clean zones, as you can see, all these zones we've drawn up, and where price is respecting. Obviously you can tell this zone is respecting in here. As we're consolidating. Now is where I like to try to figure out how can we get an entry for this trade to see if we can try to take price back up here. So if you looked at those pictures that we talked about looking for a break of trend line, a retest, and then a move. Also, if you've watched any of the Trade House trainings on mitigating candles or any of the trainings with Mike Acevedo, we can use some of that to try to figure out how can we get a very precise entry. If you haven't watched those, I highly suggest you watch them. The Trade House link is in the group. I can always post it again. If you can't find it, just ask for it. Someone will definitely drop it in there for you. But I definitely think it's worth watching. So I am going to do a little deeper analysis on how I trade now. Trying to find optimal entries. So I'm going to come over here and I'm going to grab my fib retracement tool. And what I'm looking for is I'm looking for engulfing candles that cause reversals. So as we can see right here, if you look right here, we have a bullish engulfing candle. It's a very bullish candle. We were moving down, and then price in one candle took out all this movement right here. Wiped out all this. So this is going to be the candle that we're going to base our analysis off of. So I'm going to take from body to body our fib retracement tool. It's kind of hard to see our fib retracement tool, so I'm going to make it bigger. And this is how we're going to try to pinpoint an entry. So as we discussed previously, we're looking for a break of the trend line when I do these trend trades or trend reversal trades. Is I'm looking for a break of the trend line and a push up and then a reversal back to come and swipe out all this money that's sitting under here looking for that massive bull run to come take out this money so they can collect, because the idea of these trades is they like to scoop up as much money before they swiftly move away from price. And so as we can see, for this giant candle, we've retraced 50% and 61.8%, but we've left this whole area open. So this candle is still somewhat open where price could possibly return to. It's consolidating, so right now we know that consolidation is just order collecting. So right now people are entering buys, sells, getting their positions ready to try to catch this move either further down, where we continue to follow the trend down, or we continue to follow, or we continue to break here, retest, and go up. I personally, because this has been a high probability area of rejection, I'm personally looking for the buys on this. If we come up here and then push down and just keep pushing down, you might take a small loss, but that's why we're going to set up our analysis on these candles on how to take our trade. So we've got the bullish engulfing candle here. So we're going to analyze our entry based off this candle. We have pulled back, but we haven't moved away. So what I'm looking for is I'm going to take, again, my horizontal ray, and we are looking for buys. So I personally am going to put a line here at the 50%, or like somewhere, put it at the 50%, but we're going to kind of have this entry somewhere in here. You'll notice that 50% mitigation of this candle also ends up being like 61.8 of this candle that's never been closed. And so with that, I'm going to also take my horizontal ray, and I'm going to put it at, there's the 61.8, so I'm going to put it like right here, like what I'm going to call the 78.6. 78.6, 50%, 61.8, and 78.6 are all high probability areas of reversal. And so I'll even go as far as, I guess we can put the 16, no, we're not going to put 61.8. So right now we're gonna have it at the 50%. So we know that this, and what we're gonna do is we're gonna mark these. So this was, go in here, you write text, 50% retracement, and then I'm gonna middle, okay? Oh, no, we're gonna do 50% retracement. So we know that this area is 50% retracement. Like I said, I like to keep my charts clean, and so I don't want to have too much junk on there. So this is 78.6% retracement. Okay, we're going to lock both of these lines so that they can stay there, and then we're going to come in here and we're going to delete the fib. That way now we have, when we come back and look at this chart later in the week, or if some alerts go off, we know exactly what we're looking at when we go to look at these charts. So I'm going to clean this up a little bit. I'm going to bring it here so we can see it. All right, so we want to see exactly what we're looking at. And so what I'm going to do next is I'm going to take my long position marker, and first I'm going to do this. I'm going to come over here because these are kind of in the way. So I'm just going to move these further out so that way I can have a nice clean chart. And so when I do come back to look at them, I can see exactly what's happening. So I'm going to come over here and click this thing. It's the long position because I'm personally looking for buys. If I'm going to take this, I'm not really looking for sells. If it continues to sell down, that's fine. I'll just wait. It doesn't really matter. If we don't break this trend line, I'm not looking for any buys until we decisively break this trend line. So right now, I don't consider this decisive whatsoever. So I could just see us rejecting here before we come back, break, retest, and go. Which later, if we do reject down, it does change our analysis. But at the same time, I love to see the break and retest of the trend lines before taking a buy. So what I'm going to do is I'm going to mark up my first position using this tool. We're going to take a long position right here. So I'm going to put this right here. And you can go in and decide on what kind of stop do you want to have. So I'm going to say like a 26 pip stop. For this particular trade, I like to keep these things narrow. I don't like them to take up my whole screen. And then I'm going to look for where are we going to possibly move first. and I would say right here is a pretty solid area in which price has moved and rejected from. As you can see, I'm putting this right here because if you can tell, price is rejected from here, and it's used it as support in the past, and it's also used this as resistance before swiftly moving away. So we know this is a key area that price likes to come to. So I'm going to say, I'm going to leave that little marker right there as TP1 for this trade. And then you can put lines. I would suggest putting lines so that you know as price moves where you are. But I don't want to clutter up the chart right now. This is just for analysis. So I want to delete that line. But this is why we're looking for this area right here, because we can see this has been, I mean, even if you look, if you go out here, you can see how important this level has been. Rejection, 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 consolidation, rejection, 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 and up. You know, so this is a pretty important move. So this would be my first ideal stop on this trade. I'm putting my stop loss, as you can see, just below here. I'm looking for this to, like I said, break and move up, push back down. I might set like a buy limit right here, and so that it can trigger me in if I'm asleep. And I'd probably risk 1% because on the 50%, I don't really want to risk 2% or 3% because the 50% retracement is a little riskier entry. But look at this risk reward right here. This is a 7-to-1 risk reward, 7.6 risk reward. So we're trying to catch. This is a possibility of 200 pips on just this first part of the trade. And that's just, and so what we're looking for is next is I take this, you know, we're on the 1 hour time frame. I take this, so I know that I'm looking for the trend break. I'm looking for price to come back here, touch my trend line, maybe break below it, and then I'm looking for price to move up right here. And like I said, I like to keep it clean. You can do whatever you want. I personally will, you know, do something like this, set it up, put an arrow in it so I know the direction. I do all these things so that I know what direction I'm looking for. Also, another thing I like to do is, let's say we do enter here. Let's say we get triggered in with breaks, retests, triggers, and goes. Or let's say it blows through. I like to set a second order right here because we don't want to miss this trade, right? And so I'm going to put, see this area over here, if we've broken and cleared the lows here, in the past we've swept down and come here, so I'm going to make sure that my stop loss is slightly under here. We're trying to catch more pips on this trade now because we think this is even higher probability of reversal. So again, I'm just going to risk another 1%. If you wanted to, you could possibly risk another 2%. And then I'm going to lock these things down. And so these are locked, right? So really, the two trade opportunities to make it a little more clean, since you know exactly what you're looking for, is I'm looking for this. My most ideal trade would be this, maybe possibly come back down into here, something like that, sweep all this money, maybe even take out a little bit of this money, so maybe we go into a little bit of drawdown. And then I would love to see it do this and come back up here and test that. That would be my ideal scenario. And based on our previous analysis, we know, what do we know about EJ? EJ loves to form double bottoms. So maybe we get this first move, it pushes up, we catch like a couple hundred pips or like 100 pips with a 26 pip stop loss, and then it reverses on us, but we have our stop profit in, or we took profits up in this little area. Maybe we took profits here, we took profits off here, looking for another pullback. Maybe it comes back down, gives us our double bottom again, and triggers us in on this entry. But look at the return on this one. This is a 9-to-1 on this one. We're risking 44 pips to catch 436 pips. 44 pips is like a pretty large stop. Not large, but like, it's a safe stop in my opinion. You could make it 36 pips, and now look at that. Just by changing that 8 pips difference, look at that risk to reward right there. 12-to-1 risk to reward by just changing that. So you could have it here. Maybe if you're only risking 1% or 0.5%, it's worth it to like put in the 36 pip stop, knowing that your stop loss is like 44 or 50 pips. Willing to like risk no more than like 1%, but that way you don't really get stopped out. That's what I do a lot of times. I'll risk a lower percentage than 1% so that I can give it some room to breathe, so I don't panic, thinking that, oh my gosh, I'm just getting killed, I don't want to go down like at 50 pips and then 60 pips and 70 pips, I'm going to be 3%, 4%, because that's just how you decimate an account. So I'll risk less because look, we're trying to catch 12-to-1 on this. So if we risk 0.5%, we're possibly catching 6%, 3 to 6%. So if we get here, 3 to 6%. And so what I do is I just leave my analysis here. Everything's locked in. All these drawings are locked in. I just leave it and I wait, right? So when the market opens up on Sunday, maybe we push down, maybe we push up. But I don't really do anything. I just kind of wait because I know that I'm not looking for sells. So if it continues to move down, that makes it better for us, right? So we're just going to let it continue to move down. We're not really looking to take any sort of action until we see a decisive break of this downtrend, because this downtrend is pretty strong, as you can see, as many touches as we have. But this is how you're going to go and catch lots of pips. I've had some good success on this, and the reason, this is like TP1. So on this trade, maybe, with this one, you could take off a quarter of your position here, another quarter of your position there, another quarter of your position there, and another quarter of your position there. So that way you're bagging profits all the way along and just moving your stop loss. But, that way you're able to profit high percentage returns without getting your account just absolutely creamed. So this is just a great way to look at your analysis. Now, what I like to do is now we come in and we add some indicators, right? So for this purposes, I'm just going to be reintroducing the MACD. So we're going to open our MACD here. As you can see, we have some price was continuously moving down. We have some bullish divergence on the MACD. So what I would actually look for this to do is pull up here. I'm looking for the MACD or whatever, or price to move in correlation, pull back down, and then take off. So we've added the MACD. We can also bring back in our moving averages. So what I'm really going to be looking for is as we pull back, as we break out and we pull back, I'm not just going to like enter 100%. I mean, you could do the limits. You can do the sell limits if you have that confidence. I like to set alerts. So what I'll do is I'll set an alert here that says at our 50% crossing down once per minute. So when price comes and crosses down this, my phone will start beeping and letting me know, hey, price is here. So I can either market execute, or I can go in and set my limit orders or buy stops, whatever you want to do. And I will do the same here. So I will set an alert crossing down once per minute. So now I've got two alerts. And the reason I set them at once per minute is I like to know where price is. So I know maybe I should go look at the charts, or maybe I should open my MT4 or whatever. But at the moment, I'm really not looking to do anything with this, because right now, this confirms our downtrend. We have the orange, because I'm on a white background, the orange is the 200 EMA. The blue, also known as the water, is the 50 EMA. I've got our red, which is the 13 EMA, and I've got our yellow, which is the 5 EMA. I'm sorry. These are the EMAs I'm using. They're based off of Tyrone's what's it called, DeLorean strategy, and I've really liked using them. So those are the EMAs I'm using: the 5, the 13, the 50, and the 200. I also have the 800, but I don't have it on here right now. And so what I'm going to be looking for is price to push down. I would like to see a as we push down here, I'd love to see an engulfing candle wipe out all the price that caused this down. And then what I would most likely do is if we get that engulfing candle, I don't expect price to just like swiftly run away. So I'd probably drop down. If we get an engulfing candle, I'd probably drop down to the 15-minute and look to find a mitigating candle. But we're not going to go over that today. So what I'm going to be doing is look for price to move down, engulfing candle. I'm going to look for a little retrace, maybe like a 5, 6, 7 pip retrace before I move higher. But you know, if you're worried you're going to miss the move or you don't want to miss the move, go ahead and just enter on the engulfing candle or just enter on the retracement that we learned from the trade house candle mitigation. So what I'll do is I will come up here, I'll click my camera, and I will save this image, and I'm going to go ahead and save, let's see, file, save as, desktop, I'm going to call it EURJPY, 1 hour time frame for analysis. And then I will save that to my desktop, and that way that chart will be there on my desktop as well as marked up on my computer so that I can go ahead and have this when I get ready to hit my trading week. And then I will come over here to my list of trades that I'm possibly looking at and clear all these out. And let's find EURJPY, which appears to be this one, and I'll mark it as yellow. And I mark it yellow so that the trade is pending, or I know this is a trade that, hey, keep your eye out on this trade. Keep your eye out. You have an analysis here. This is marked up. This is on your list for the week. So you know, maybe once every 2 or 3 hours to come back and just check price and see where it's going. But for the most part, I will keep all this clear. If you really want to try to find an even more precision entry, I will drop down to the 15-minute. And you can see our moving averages are starting to pinch. And when our moving averages are starting to pinch, as we've seen, anytime there's a pinch, we get massive moves, right? So when you get the moving averages like this, you can look for absolutely behemoth moves. Look at this, pinch, pinch. And so I'll do another training on that, but today mainly this training was about marking up your charts for success. I would even maybe go, so this is a good trend line. When it's all said and done, I will remove these moving averages so that my chart is clear and my analysis is clear. So be sure to lock everything in, go in there, mark this chart up. I'll share this chart in the group. I hope this video was helpful. I'm going to do some more of these every time I analyze a chart so I can just show you what I'm looking at. But we're looking for clean, smooth setups. So hopefully this is something that I will be looking at going into the week, looking to profit off of, so we can try to catch some pips. Hope everyone enjoyed this video, and I will see you on the next one. Have a good one.